In our series of learning about FCCS. Our today's topic is consolidation scenarios. So we are going through the consolidation process, how the consolidation process takes place for different scenarios. So for today, we will see how the consolidation takes place for when there is when there is an 40% investment in entity, and when there is an 18% investment in entity. uh, so when an investment of 40% is made in an entity, then we mm, use the term associate or affiliate, affiliates in place of subsidiary and parent. Because in subsidiary method, we actually we combine the assets and liabilities of parent and subsidiary, while in associate, we the associate or affiliate terms is used when the investment proportion or the ownership is structure, when the ownership percentage is range between 20% to up to 50%. So in that case, the associate word is generally used. And similarly, when the ownership percentage or the share which an investment and entity own is less than 20%, and then we use the term cost method. For that cost method is used for that purpose. So let's see how the 40% investment in any entity gives us the result in our scenario, and also in our application. So I have already prepared one scenario for this purpose, that is a 40% equity. So this is our purchaser or parent, and in application it is known by the name E underscore 101 or East 101. And our the subsidiary, it is better to term it is as affiliate, is East 102. So East 101 has purchased 40% shares of East 102, and we have calculated the total figure, combined figure under the parent, the grandparent, you can say, uh, total E 100 or E underscore 100. So the assets and liabilities of both the entities have been given here and there. So it is 6,05,000 for assets, and for equity it is 3,20,000, and trade payable is liabilities. So it makes our liability or balance sheet total 6,05,000, 6,05,000. So let's see how it and we will go and input this figure in our application, in our smart view. So let me first remove these figures. So this is our input sheet where we are going to enter the different figures for the mm, uh, different trial balance figures of both the entities. Similarly, we will also remove the investment amount in the associate or affiliate. So this is our input sheet, and I have already connected this to application. This is smart view. So for debtors, the name which are appearing in application I have used exactly the same in my Excel file. So this is the alias name, and this is the actual account name for our convenience and better understanding purpose. So debtors is our 1,75,000. Bank balance is our 1,50,000. Trucks means asset is our 80,000 and investment in subsidy is 2 lakh. Trucks are 80 trucks and investment in subsidy is 2 lakh. That I will put in a separate sheet because it needs some a different POV. So, and for better understanding purpose, I will use this in our different sheet. This amount, the investment amount, and the share capital is 3 lakhs. That is common stock, and the liability trade payable is our 2,85,000. And similarly, for getting this retain earning figure, we will just input the income and expenses so that we can get an retain earning figure, that is our P&L. So for that we will enter this income 1 lakh, it is 50,000, and salary overhead it is 30,000. I think it becomes 5 lakhs, so it is 50,000, and just submit the submit button, submit data. So it has given us a difference of 2 lakh because we have not entered the investment figure yet. So similarly for the associate or affiliate, it is 90,000, 130 and 55. 90, 30, 1 lakh 30 and 55. And the share capital 1 lakh 50 and the retain earning 1 lakh 50. And let's arrive at the our retain earning figure or profit figure. It is 60,000, 40,000 and 15,000. 60,000 as our income, 40,000 as our direct wages, and 15,000 as our let me check once again. 60, 40, 15. Okay, 60, 15. So there will be a profit of 5,000. Let's submit. Acha, we have not entered the creditors figure for associate. So it is 1 lakh 20,000. That's why it has giving us a difference of 1 lakh 20,000. 1 lakh 20,000 and submit. So now let's refresh it for one time, and this is the basic fair trial balance which we have loaded, and for the investment in associate, that is a that is for the 40% which we have acquired, we will put this figure here. It is 2 lakh. So East 101, that is we can say it the investor has made an investment of 2 lakh in East 102. That is our associate. Hence we are for intercompany, we are using the intercompany dimension member here, and East 102 ICP is one of the member for intercompany. So we are entering this amount of 2 lakh under ICP for East 102, that is our associate. And let's submit the button. And So it has accepted our figure. Now we will come to the output sheet here. But before that, we have to run the consolidation and have to define the ownership structure for these two entities, that is East 101, 102, the investor and associate, the affiliate. So let's move on to our application. Under application, on the home page, from application we will go to consolidation. So here we will see our POV. POV is our correct entity, scenario is actual, year 2015 and period is January. And we will select our the investor and the affiliate. So here East 101 is our holding company, and the other one East 102 is our associate. So we will change this percentage here. See, though it has changed the consolidation method from subsidiary to equity, and consolidation is not done here, and the minority interest is also not calculated here. It has reduced. Let's see. In case of 60, if we do it 60, then it automatically changes the consolidation percentage and the minority interest percentage and a consolidation method. So therefore we will change this to, as we are doing this for 40 with 40% ownership control. And let's save the ownership structure. Data have been saved, and let's recompute ownership data. Our scenario is a proper actual to 2015 and January. So from here, the next process, it's to run a business rule. For that, we will go to navigator, data, under data status. We will just run the business rule from here for this entities we selected, and for the POV we have chosen. So let's see, these both the entities are shown as their calculation status are shown as they're impacted because we have changed their ownership structure. So from action, click on business rule, and from consolidate, we will now once again run the select proper POP, our POV. The POV is our proper for East 100 E underscore 100, that is our grandparent, and the consolidated entry, the group entity, we can say actual scenario is actual, period January, and in financial year is 15. So just launch it. So it is processing the business rule for our investor and associate. So it has given us the message that the rule was run successfully. Now move on to our smart view. So this is our input investment, and this is our output file. Just refresh it. So it has given us the number. Let me hide some of these columns so that it will be helpful for us to understand and to view the things. From here we also reduce the additional gap which restrict our view. This one is the firm. So let's see whether it has does this figure match with our Excel scenario. So our Excel scenario under consolidated balance sheet. So our total assets comes to 6,07,000, and for this, this is also comes as 6,07,000, and our balance sheet figure here is 6,07,000 balance sheet and equity. So it has also tallied 6,07,000. Our liabilities comes to 2,85,000. It is here 2,85,000, and our equity comes to 3,22,000, and our equity is here 3,22,000. Similarly, the goodwill, our goodwill is 1,40,000. So it has given us a correct figure 1,40,000. This is our goodwill amount. Let me expand it. Actually, it has opened our height columns. Let it. So our goodwill is 1,40,000. See here. An investment in equity company. It has come as 62,000, which is which include the investment in equity companies. That is investment, pure investment, which we have made. That is the 40% share which we own, and the income which we arrive from, which we get from our the profit of associate. So this is the 62, and how this amount has arrived, we can see this from our working. So the shares in investee company or the associate, it is 40% of the total share capital of associate. So it comes to 60,000 and 2,000, and out of the profit which the associate has earned for the period, it is 5,000, out of which 40% share is belongs to the investor. So by adding these two figure, it comes to 62,000. So this is investment amount, and this is our income amount. So that's why it is showing separate. 60,000 is our investment amount at historical cost, or you can say the purchasing price, and 2,000 is our income which we derived from it, from from such investment. And owner's equity is 3,22,000. So 3,22,000 is our equity equity amount. So it includes the share capital of investor, and 22,000 as our the retained earning. So how it has arrived? So 20,000 the retained earning of investor, and 20,000 is the profit which we received from it for our share, but equal to 40% share. So it has comes to 22,000, which makes the total equity 3,22,000. It is here. The breakup of this is given here. That is the retained earning current 22,000 and 3 lakhs. That is our retained earning 22 and 3 lakhs. So it has tallied our balance sheet. So it has given us the correct figure as we did for in our Excel scenario. So in that case, we can see that the investment which we made in associate is not ignored, but it has been shown as an investment in the combined balance sheet to the shares of equal to the share, the percentage we own, that is 1,50,000, and out of which we own 60%, 40%. So it comes to 60,000. 60,000 and the income which we received from it. So this is the working which I have shown you. here and the share from profit. So it has given us an the correct picture of it. Now let me show you the those rows which I have hide it here. So under this we can easily see the elimination figure. So let me just delete this row, this column, sorry. So at the total data source level, that is the total input and adjusted level, it has given us an figure of 6,05,000 out of which is added here. So it comes to it that makes our the total of our combined fixed asset is 6,07,000. And similarly, 2,85,000 is the one. And for the equity, 3,20,000. Let move on. It is better to understand from this part. This is our common stock share capital is our 3 lakh, and and this is our current earning, that is retained earning 20,000, in which 2 lakh or 2,000 has been added due to the uh, ownership structure of 40%. So it makes us our the total retained earning as 22,000, and it has eliminated our investment in subsidiary. So 2 lakh. So it has nullified the figure of investment in sub in our combined balance sheet. So from here we can see what has been eliminated or what has been added. So now let me save this as a one of as a smart form. Consolidation equity 40%, and just save it. So it has saved our the data in our data form as a smart form for our purpose. Now we will move on to our next scenario, that is the investment in entity. When the investment is less than 20%, the cost method applied, and we will see the scenario, how the scenario works when we have investment of 18% in other entity. So this is our second scenario, that is the 18% investment in our in other entity, and 18%. All these figures are given here. Similarly, the balance sheets are same here. We can see the figures are almost same, but we will change the ownership structure or the from 40% to 18% and see whether the result which we have taken from the are visible here are arrived in application in or not. In this case, equity method, what we do, we just add in under for balance sheet for assets, only the purchaser or the parent company, you can say, the investor figures are shown here, that is 1 lakh 50 80,000. Investment in subsidiary, it is shown here separately, and we can say investment in equity, it is better to write here. Let's leave it. So goodwill, there will be no goodwill calculation for uh, cost method. We can write it as here cost method. So for share capital, only the share capital of investor will appear, retain earning, only the retain earning of investor will appear here, and similarly the trade payable for investor will appear here. So investment in sub, how it has arrived. So this is the amount which we have shown here. Now let me show this like this. So this is our investment in subsidiary, or we can say as UBS, which is one of our application member, and investment in equity companies. In balance sheet, it will be shown by the name investment in equity company. So let's do this exercise in our application. So let's take a screenshot of it for our purpose, so that we can find a difference between a screenshot 40% versus 18%. So this is our scenario for Excel scenario. This is our Excel scenario, and this is our output sheet. Output sheet. Let's take a screenshot of this also. That is 40% share ownership. So for our second scenario, let's move on to call our Excel file. So the figures are almost same. The figures are same for the input sheet. We will have to just, an investment amount is also our 2 lakh. This is our 2 lakh, and let's see the what it how it what figures our the application gives to us. So for that, for getting that figure, we will go to application on the home page. From application, click on consolidation, and from here our scenario is proper, that is actual financial year 15 period January. So this is our both, this both are our company, and this is our holding company 100, and now we will change it to 18%. As we change the ownership percentage to 18, the control comes to no, and a consolidation method is not consolidated, and the consolidation percentage is 0 and minority interest is 0. So let's save this POV, the structure. From the action, recompute ownership data. Let's recompute it. So each and every time we change the ownership data, we have to change the have to come here and to change the percentage, ownership percentage, and from here we will go to data, and under data to data status. Sorry, this is the data status. So for under data, we will go to data status, which is already opened here. So it is open here, and from here we will run the business rule. So see, the only East 102, that is the associate or the investee company, is impacted here. So let's run the rule for it. Business rule, consolidate. We have already defined the POV, January actual FY15, and our grandparent is E underscore 100. So it has run the rule successfully. Now we will go to our output sheet, and here we will just refresh it and see what figures it delivers us. So let me hide these 2-3 columns for a better understanding, and let me increase the size of it. Let me once again try so that I can create some space for our proper purpose so that we can easily see the figures. It is no intercompany. Is similarly for just delete the extra space which has been occupied in this. This is entity input. We can have a compact view. So let's see what are the changes it has been made in our figures of in our balance sheet figures. It's still giving us the goodwill figure, which is not actually correct. East 101 is intercompany top. The defined, we have already defined this figure. Input is our proper. There is no problem with it. Let me refresh it once again. Investment is 2 lakh. And our output should so it is still showing the amount in goodwill. So let me once again input this figure of 2 lakhs. Then let me submit it once again. So it is still processing the submission of data. So it has completed. I think this figure is also tallied with our 605 275 285 120 285 and 120. Let me run the business rule once again, and let me once again check the ownership structure is saved or not properly. Application consolidation. actual 15 January, so it is 18%. Let me punch it once again, just save it and recompute the ownership data. Recomputing, it's okay. From navigator, under data status, we will now once again run the business rule. So East 101 has also been impacted, showing as impacted now. So our POV is correct. Actual 15 and entity currency. Action business rule. Consolidate. Just launch it once again. Let's see whether it works for us this time. So, such problem may arrived due to some due to the application. So it has given us the successful. So both the entities have been impacted. And let me once again go here and refresh the data. So see, now it has given us the proper figure, right figure. Now let me close these two, which I will show you afterward. So what it has done, earlier the investment, there was a calculation of goodwill, but in this case cost method, the goodwill amount has been removed. This one, there is no goodwill amount here, and also in our scenario there is no goodwill amount. In place of that, the investment in equity company is there. What we have invested 2 lakh in E102, so which has shown it here. See, it is here. This is our figure. While in earlier cases, the investment in equity companies is not shown separately, but in this cost method, this investment in sub is shown here, 2 lakhs. And let's go one by one. That our total equity is 3,20,000. It is 3,20,000, which comprise of 3 lakh as common stock, and retained earning current is 20,000, which makes our equity as 3,20,000. And similarly, our liability or trade payable is 2,85,000. This one, 2,85,000. So that makes our total liabilities and equity to 6,05,000. And similarly for asset 6,05,000, which comes from here. 1, 2, 3, and this one, these 4 figures. Investment in sub debtors 1,75,000, bank bank balance 1,50,000, and asset 80,000, which makes our total 6,05,000. 6,05,000 here. So it has given us the correct picture based on our Excel scenario functionally. So functionally is our balance sheet is now tallied, and also in application it is also now tallied. So, and let me unhide this 2-3 columns, and here we can see what there is no elimination or addition in it, because the investment which we made in the entity, or we can say the investee, is shown as investment in sub in combined balance sheet. So there is no goodwill and there is no minority interest or non-controlling interest. We can see the profit is accordingly income. And let me see this, whether I can show this amount. This is 20,000, right? So this is how the equity method and the cost method works functionally, and it has given us the correct figure, the result in our application. So we can just quickly take an screenshot of it. So this is our figure. Just paste it. 18% share ownership, OWNER, and the output 18% ownership, share ownership. So the figures are now can be seen at one screen. And let me once again save this as our smart form so that we can use it, refer it later on. Consolidation cost method 18%, and just save it. So today we saw under FCCS introduction the two consolidation scenario: 40% investment in entity, that is equity method, and the 18% investment in entity where cost method is used. So I hope you find this session useful, and will give your comments or will raise your queries or questions, which you can address to our through our website www.bispsolutions.com. So now it's time to say goodbye to you, and thank you.